Welcome, Satya sir.
Yeah. So I think
Yes, Priyanka, let's start.
Yes.
So hello, good evening, namaste to everyone. I'm Priyanka Maheshwari from the 20th batch of EDI, and it's great seeing you all in this session of Fin Talks brought to you by the EDI Alumni Association. I would like to welcome you all to this exciting evening in which we'll be looking into the fascinating world of technical analysis and how to use it to make smart investment decisions. So before I introduce you all to the guest speaker, I wish to invite our professor and director at Department of Entrepreneurship Education, Professor Satyaranjan Acharya from EDI Ahmedabad to deliver the opening remarks for this session.
Okay.
Sir.
Thank you. Thanks a lot for me here. And really interesting to see so many meetings. I think we all there into business investment, and also I think technical analysis is also very essential for those who are interested to go for the stock market or other related investment, commodities or forex. I think we'll all gain a lot in this interactions, and hope to listen for this interaction. Thank you. Thanks for giving me.
Thank you so much, sir. Now, let me invite Dr. Ganpati Bathini from EDI to deliver his remarks for the session.
Thank you, Priyanka ji. Thank you, Palash, for organizing these wonderful talks. I wish all the best, and I hope all alumni will be benefited from this talk. And there are two additional requests from all the participants, from all the alumni. Tomorrow, this ecstasy is there at 6 o'clock. And I request all to come to the campus and make this event a grand success, along with your family, friends also. I forgot the name of the. I hope you might have received my message regarding tomorrow concert.
Nikhil D'Souza is coming, sir. Nikhil D'Souza.
Yeah.
Also, I forgot his name. My memory is poor in that sense.
So he is Nikhil D'Souza.
Nikhil D'Souza.
He'll be there. Yeah.
Yes. And also, I have a special request to all the alumnus. Please apply for this Best Alumnus Award for the both streams, entrepreneurship plus development sector. Please take some time and apply for this also. In case if you find any difficulty or in case if you need any support, I am available there, and my colleague Nisha Makwana is also available. Please apply for this. I hope you will cooperate with us. And I see you tomorrow. On behalf of Dr. Shuklaji and Satya sir, I invite you for tomorrow program. Please. Thank you. Thank you, Priyanka. Thank you, Palash.
Thank you, sir. Sir, we will surely there.
Thank you so much, sir. Moving on, let's welcome our guest speaker for this evening, Mr. Brijesh Soni. He's a partner at Midas Touch Wealth Management along with me, and he has over 12 years of experience in the Indian equity markets. He holds a chartered degree in technical analysis along with a master's degree in international business from London Metropolitan University. This is going to be an interactive session, so whenever you have a doubt, you can raise your hand or just write it down in the chat. We will also have a question and answer session in the end. Lastly, on this beautiful occasion of Akshaya Tritiya, we have a small surprise for you in the end, so do stick around. Having said that, let's welcome Mr. Brijesh Soni and kickstart this session. Brijesh, sir.
Hello, everyone. I hope I am audible.
Yes.
Technical analysis, according to me, it's basically just understanding the psychology of whoever the market participants are. So it's a mixture of psychology of everybody, big, small, large, and giants. And one particular field in technical analysis is called is called intermarket analysis. And intermarket analysis basically consists of all the asset classes that are available in the world. So there are mostly only 4 financial asset classes that are available. So I'll just share the screen and move forward with the presentation. Is sharing started?
No, the sharing is not done yet.
Not sharing.
Yeah.
Yeah, now.
Okay. Uh, uh, that's the disclaimer. So no recommendations are done in this video. So everybody needs to consult that financial advisors before investing. Let's start. What is intermarket analysis? So basically, intermarket analysis, if you just consider that the total savings of the whole world is 100 rupees, and everybody is looking for investment opportunity, and there are only 4 asset classes that are financially traded in the markets. That is uh, currencies, commodities, stocks, and bonds. So all these 4 asset classes are fighting with each other just to get capital. And how this intermarket analysis helps is it helps in identifying the trends, which asset class is going to outperform the other asset class in short term, medium term, and long term. So it helps in diversification of your portfolio and risk management as well. And timing is basically get into the market at the right time. You can buy a stock and wait for a year, but if that sector is not favorable under the current whole macroeconomic situation, that sector is never going to perform. So as I told, there are 4 asset classes. First is equities, second is bonds, third is commodities, and fourth is currencies. So from all 4, bonds is the largest market in the whole world. And bonds is basically mostly traded government security bonds, and that is the largest fixed income market where most of the money goes. From 100 rupees, at least 60 to 65 rupees is basically savings are parked in bonds. Rest commodities, equities, and currencies have to fight with the bonds to get the capital they want. So as I said, all 4 are fighting with each other. Everybody wants capital. So in what circumstances? Like this basically helps you in understanding it in what economic cycle right now the world is, and from there you can move forward. If you are investing in equities, then what sectors will perform, that will take a look at later stage, that how in an economic cycle what sectors perform at what place in an economic cycle. Now this is a chart of bond and equities. This is NSE 500 index, and the other one is 10-year government security bonds. So you can see that each and every high or low made in all the charts are exactly opposite to each other. So basically, it's an economic cycle that goes from expansionary stage to contraction. It bottoms out, and again, this economic cycle keeps on rolling from from greed to fear. So basically, we are too optimistic when the economic cycle is at high, and when we are too pessimistic when the economic cycle is low. So what happens in this economic cycle is every time equities bottom out, bonds will be topping out, because when this economic cycle turns from expansionary to contraction mode, most of the people are not ready to take risk. No investor is ready to take risk at that time, and that's the reason bonds get the highest inflow at that point, because bonds are considered risk-free rate. We can say it's a risk-free if it is government bond. So each and every government bond is considered risk-free as of now, and That's the reason that every time there is a problem in the economy or any problem in the world, you will see the flows going from riskier assets to safer assets. And to safer assets, we say bonds are the safest in the world. So each and every, if you see each and every top are exactly parallel. So whenever bonds turn down, equity markets go up. So that's the fight between bonds and equities, and this keeps on going as the economic cycle keeps on rolling. Second comes commodity and US dollar. Has I guess everybody knows that each and every commodity in the world is basically measured in dollar terms. So what happens when dollar gets expensive? That each and every commodity comes down. So if you see, this is the CRB index. This is Thomson Reuters and Thomson Reuters index, and this is considered all the industrial commodities, even food grains are included and energy is included. You will see that every time this is, and other one is the US dollar index. This is pegged with 6 currencies. So world's major 6 currencies are pegged against dollar, and they have made an index that shows that what is the value of dollar against the major currencies in the world. So you will see that commodities and dollar index exactly work in the opposite directions. They have a 100% negative correlation most of the time, similar to bonds and equities. So this is a currency, that is a dollar, and commodities. They both trend in opposite directions. And how dollar will behave in different situations, that will result in how the commodities will behave in future. Commodities and emerging markets. This is commodities and our Nifty 500. This is Wisdom Tree Industrial Metals ETF. This is one of the index that does not carry any weightage to energy. So it gives you a picture of how the base metals and other commodities are behaving. So if you'll see, apart from a particular time after 2008, most of the time there will be a positive correlation between emerging equities, that is we are included in that, and emerging markets and commodities behave together. They'll go up together, they'll come together, because most of the emerging equities are commodity based markets. So basically, if commodities and emerging market equities trend have a positive correlation, uh, obviously we will have a negative correlation with dollar index. So yeah, I guess the chart is wrong over here. Sorry for that. Let's move on to commodity producers and metal stocks. So how stocks and commodities behave. Let's see an example of Hindalco. This is a stock that is mainly a producer of aluminum in India, and the blue line is the aluminum futures, MCX futures. So that is the price of aluminum. Uh, Most of the people in the market think that uh, it's the metal prices that give rise to the stocks of the commodity producers. It's other way around. Every time the commodity producer will be ahead of the metal prices. If you can see the high over here in 2018, Hindalco had a double top made over here, and after that aluminum prices again rose and made a new high, and then they fall. Similarly, during 2020, it was the Hindalco stock that started going higher first, and then aluminum uh, carried on together. Here we can see that Hindalco stock again has moved forward higher. Aluminum prices are still going down, and there is a lag effect. This lag effect will always be present, because those who are producing, equity markets are always ahead 9 months from the economic cycle. So equity markets are always, we are always trading on the future prices. Whenever we value the market, we say at this future PE. or at this future price to book. So equity markets are pricing in the future, and we are trading the future prices. We are not trading the current prices. Uh, that's the reason, because before even metals pick up, the stocks will pick up, anticipating that the metals will pick up. So that's how stocks behave against the commodities. Produce Commodity producers will first go higher, and then the metals will move forward. Uh, Crude oil is one of the most important thing to keep in mind whenever you are investing in equities. Uh, in last 40 years, we can say each and every recession had a contribution from higher crude oil prices. It's a statistic is that every time world GDP, if the energy expense is more than 10% of the world GDP, economy will never go higher. The GDP will always lag. And currently we have 13% expense of world GDP going into energy. So if you see that every time energy prices spike, the markets will come down. This is the emerging market equities ETF. This is world over. All the emerging markets are included in it. And you will see that crude and equity markets both are correlated. But every time crude goes higher than a nominal rise, equity markets come lower, because the expense of energy onto the common man's pocket will hurt his so he will disposable income will be less, and that disposable income, that's the reason that every time if crude spikes much more higher than expected, economy will come down. So why is the reason that crude hurts so much?
Brijesh sir,
Because of the crude. Yeah.
I have updated that chart. So if you want to go back to it, you can.
Okay.
Dollar index and emerging.
Yeah, we'll look at it later. So, like, why crude is the reason that every time we see an economic recession? The simple reason is, as crude rises, everything in the world gets expensive because the transportation cost increase. And that's the reason that every time crude spikes, you will see this 2-year yield. This is US 2-year bond yield, government bond yield. This yield will go higher every time crude goes higher. This is the only time when it didn't go higher. That is the reason US Federal Reserve was active in the market, and they didn't wanted higher uh, bond yields. So you'll see that once again in current situation, the crude prices have gone so higher, and the 2-year interest rate is higher. So every time crude will go higher and it will bring inflation, central banks will be forced to raise the interest rates, and that will be become a headwind for the equities and economy as whole. Gold and stocks. Gold is basically considered has a protection of inflation, protection against inflation in the whole world. From 5,000 years, it has been true, and gold has always held uh, higher than the inflation. So whenever uh, economy is everybody in the economy is optimistic, the price we'll see inflation, because the spending will be more, so demand will be more and supply will be less. So eventually there will be inflation in every economic boom, and as soon as the inflation kicks in, uh, equity markets will top out, because short-term interest rates will go up and gold will start outperforming. This is a chart of gold. Uh, 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 Gold divided by Nifty 500. So it's a ratio chart, and this is Nifty 500. You'll see that every time there is a high, this is the equity market topping out, but the gold has already started outperforming over here in 2018. Similarly, before Corona, 2020, before equity markets witnessed a bottom, gold started going higher, and the same case is over here during 2021. Again, gold has started going higher as soon as the equities are going lower. So gold will exactly be your diversification tool against equities and most of the financial assets, because all the financial assets won't be performing well in an economic downturn, while gold will be the protection against the inflation. So there will be sizable uprise in the gold, and we are actually in that period right now. Another barometer of risk all over the world is high yield corporate bonds. Uh, so as we know that in India, each and every hour in Indian companies even go to overseas and they do external commercial borrowings because the interest rate is cheaper in the world. But the drawback of it is because this is considered the riskiest asset in the world, because corporate bonds are not backed with any mortgage or any security and behind. They basically work on trust, and whenever there is any risk in the equity market witnessed, these high yield bonds will tank. If you can see that before 2016 top, these global high yield bonds started going lower. Before this high in 2018, they again started going lower. Here also we can see in 2021, before the market top, uh, already the bonds were going lower. So this high yield bonds, this index is called HYG. It's a traded ETF world over. It's one of the most active ETFs, and this is the barometer of risk all over the world. Every time you see something happening, SVB bank happening, or you can say any problem in crypto markets, or any company defaulting in the world, these bonds will be affected the first, because these are the most riskiest asset in the market right now. So every time there is a trust deficit, there is a risk propping up anywhere in the world, you will see this bonds go lower. And if these bonds continue going lower, then the risk of default increases across the world. And that's the reason that you should actually keep a close eye on this, because every time this will be a leading indicator 6 months before what is going to happen in equity markets. Now, this was how all the four asset classes behave. Uh, Now let's come down to how the sector rotation happens in an economic cycle. Because every time you want to invest in equity market, the first question is what you will buy and when you will buy. Uh, the sector rotation during an economic cycle gives you the answer for both these questions. And let's see how it behaves. As I told earlier, the red one is actually the markets, equity markets, how they are behaving, and the green line is the actual economy. You will see that there is a lag. Equity markets top out much earlier than the economy tops out, because equity markets are trading the future. So at least 6 to 9 months ahead, the equity markets would have topped, and the economy will top after 6 to 9 months. So, and these are all the sectors how they will behave in an economic cycle. Each and every sector has their own reasons why they are behaving such. But if you see over here, when economy is even dragging down, you will see the technology, cyclicals, industrials. These are the ones that market are already bottomed. Economy is still not bottomed out, but stock market is already bottomed, and stock market will even start going higher even before the economy bottoms. So the first sectors that will go higher are considered industrials, technology, cyclicals, and basic materials. This technology will be a question mark for India, because this model is based on a global level. But technology stocks in India are totally different than the technology stocks what are abroad. All the global technology stocks are majorly platform companies, and the technology stocks in India are basically, we are service providers. So we are the back end guys and they are the front end guys. So the technology has shown over here will never behave the same way how it is predicted for global. Let's see, industrial metals. So first we saw materials and cyclicals. Metals are considered one of the cyclicals, and this is a chart of Nifty 500, and This is a Nifty Metal Index divided by Nifty 500. So basically, this is a ratio of Nifty Metal Index, how Nifty Metal is performing against Nifty 500. You'll see over here that this is the ratio. Nifty Metal Index already bottomed before even Nifty 500 bottomed. It was 6 months in ahead. So once metals bottomed, even Nifty 500 kept on going lower for 3-4 months, and metal started outperforming. The same thing happened over here at the top. At 2018, the market kept on making lower highs, lower lows, but you can see the metal already underperforming. So even at the top, metal will start underperforming much ahead of when the broader markets actually top out. The same similar thing was seen in 2020 in October. Here is October when the market peaked, and this peaked here actually June, July. So metals market peaked at June, July, and after 3-4 months, the broader market peaked. So the cyclicals, all the cyclicals that you want to invest in, all the cyclicals that are considered in India, they are the leading uh, uh, metal. This is leading index. So they'll bottom out much before. So you'll have to be accurate in timing them before even the economy is bottoming out and the stock market is bottoming out. You will see the outperformance of metals before the stock market bottoms. FMCG. FMCG, India is the consumption-led economy, and we have officially now 140 crore. So everybody will eat, drink, wear. So consumption is the biggest defensive sector for India, and has being a defensive sector, every time there will be a problem in the economy, there will be a sector rotation in FMCG stocks. So FMCG stocks in India are Britannia, Hindustan Unilever, Marico, Dabur. These all stocks will see inflow as the market approaches the top. You'll see over here in 2021 when the market topped, FMCG ratio actually bottomed and FMCG stocks started going higher. So rest of the market is not going anywhere, but FMCG stocks are outperforming. Similarly, here at the bottom of 2008, when the market started down in the end of 2008, actually FMCG stocks were going higher. So they actually work exactly opposite to actually the larger trend. Every time there will be a problem in the economy, in Indian economy, the sector rotation will be fastest in the FMCG stocks, because everybody knows that people will eat, drink, wear, and go out. At least that in the economy will keep running. Another sector, utilities. Utilities in India is considered most of the government companies, very high dividend yield paying companies. These are the another defensive sector. But this sector is that sector that outperforms the market once the top is in place. So I just chosen one stock, Power Grid. This is Power Grid divided by Nifty. Orange line is the Power Grid stock divided by Nifty 500. So it's a ratio of Power Grid, and this is the actual Nifty 500 index. You can see in 2008 the market was bottoming, but Power Grid was going higher. This is the dividend play in India. Utilities go higher because they give you the highest dividend. And when there is no certainty what type of returns you will get in equity markets, utilities will go higher with FMCG stocks. Here again in 2013, when market stopped and started going lower, Power Grid again started outperforming. So that's the case right now. We topped in 2021, and since then, Power Grid is outperforming the market. Consumer durables. This is also a cyclical sector, but this cyclical sector has to be kept in mind with how interest rates are behaving. this is the chart of cyclicals. The index doesn't have much data in India. That's the reason this chart is just from 2022 September. This is the consumer durable index divided by 10-year bond yield. So basically, this is the ratio chart of bond yield and consumer durables. And this is the 10-year bond yield, orange line. You'll see that every time interest rate starts going higher, consumer durables will keep on coming lower, because the higher interest rates will limit the disposable income every household will have, and the discretionary items, your fridge, your AC, your cars, everything that you buy with on EMI right now, the consumption of that sector goes lower, and that is simply what is happening right now. Because the interest rates have gone higher, the consumer durables are now showing some signs of what direction. So since 2021 high, consumer durables have bottomed as interest rates went lower. So this sector has to always be looked on the viewpoint of how interest rates are going to behave, because the outperformance in this cyclical sector will give you like 100% return in 1 year or 1.5 years, but that cycle will immediately reverse as soon as the interest rate reverses. So, but this is a very volatile, and you can make money, quick money. You would have seen how Havels have performed, how Voltas has performed, how Blue Star has performed. So these sectors, when they are in favor, they give you sizable returns. This is how where we stand. What is the sectoral performance right now in last 6 months? So whenever you want to decide that at what point in the economic cycle we are, this is a common practice that you take last 6 months and just you create a ratio chart. This chart you can easily make in TradingView. This itself is made in TradingView, and you can see that from since October, the best performing sector is finance and FMCG, and the worst perform is energy and consumer durables. So FMCG is the defensive sector. Finance sector is going higher in anticipation that economy will slow down and interest rates will come down. And as everybody is expecting that economy will slow down, FMCG is outperforming. So FMCG and finance has economy is facing headwinds. FMCG is considered as defensive sector and is outperforming. And as economy contracts, central banks will have to come and lower the interest rates to stimulate the economy. And lower interest rates will make finance stocks have better outperformance. They can give more loans, and similarly, that is the reason consumer durables is bottoming out over here, because as economy will contract and central banks will reduce the interest rate, the affordability angle from the EMI part for consumer durables will improve. So right now, consumer durables is in the bottoming out process. So for today's special, let's see how gold has behaved. Like this is the gold. Like I have seen a lot of people saying gold is a dead asset, does not give you any return. But according to me, this is the best asset that can store the value of your money. Because fiat currencies will depreciate as the economy grows, and there will be more supply. And gold will keep on outperforming and preserve the value of your money. This is the performance from December 2015 in Indian currency. So far, yesterday, gold has given 10.85% CAGR return, and this is Nifty 500. It has given 9.77% CAGR return. Why we are at an advantage in India? This is the reason. This is the chart of USD INR since 1980. You can see a secular uptrend, and this is the reason because we are in the single currency packed world where US dollar is the center, and as long as that persists, our currency will keep on falling, and that will benefit the gold in Indian prices. So gold is attributed as the perfect hedge against inflation, and fiat currencies will keep on increasing money supply, and that money supply will lead to more inflation, and that inflation will be hedged in your gold savings. So whoever right now thinks that gold is not an actually investable asset, this is the only asset that is the safest in the world, and that will store the value of your money. So we always recommend at Midas that at least 10% to 15% of your savings, your wealth should be invested in gold, because at the worst time of economic crisis, this will be the asset that will save you. Happy Akshay Tritiya to all. So that's the end.
The floor is open for any questions if you want.
The forum is open for Q&A. If everyone has any doubt or query, please go ahead and ask, sir.
Yeah, I had a question.
Yeah.
This gold as an investment, when you talk about, is it wise to go for physical gold or SGB? Because what I've come to experience is that if you are looking purely for an investment purpose, then SGB makes more sense, because you don't have to store the gold and you also get an interest of 2.5% annually. So how we can go about it?
Yeah.
Is it okay to really invest in physical gold or SGBs every time?
Still, I'll tell you 50% SGBs and 50% physical gold.
Okay.
So basically, how SGBs are floated in market. Whatever gold Indian Treasury holds, lends it to a bullion bank. Bullion bank issues those bonds. Those bullion banks are paying you 2.5% interest rate.
Okay.
So basically, the gold is lended by government.
Yeah.
So as far as it is a financial asset, the safety of your gold is in question mark when there will be real distress in the economy.
Okay.
So you will really see distress times. In 1971, US came out and just said that we won't pay gold against our dollar. So that was it. That's how the backing of dollar against the gold was ended. So as far as you can hold gold safely, I'll say physical will be my first preference. Then will be the SGBs.
Okay. Okay.
So if you want to generate income on the gold, physical gold you hold, MCX now has mini contracts and even options for mini contracts.
Okay.
So you can sell, you can do covered calls over there, and you can easily make 2.5-3% income. Even if you sell a call of around 10% higher value from right now, you'll make 2% yearly. So how to generate return on your physical asset, that's a different strategy. So you can do it. You can buy 100 gram gold, keep it at home, and you can hedge that 100 gram gold in MCUs.
Okay.
So that same way you can even generate 2.5%.
Okay.
But as far as physical, because the largest ETF in the world is SPDR Gold. And I have read so many articles. I have even seen the financials. And according to the fund value, there is no possibility that they hold that much gold, first of all. Because there is not that much physical gold in the world that they can hold.
Right.
So So always paper gold will be a way of each and every government and each and every larger economics to keep the price of gold appreciated because their currency looks more attractive.
Mhm.
So, so the gold doesn't go higher in good times. That is the reason, because it will be kept artificially low. But
Okay.
the real rise of gold will you will see in every time there is a economic stress or
Mm.
anywhere there is any geopolitical risk. So that manipulation to keep the gold prices low won't work over there because the demand is much higher than what they can manage. So
Mhm.
every time there is a problem, you'll see a 50% or 100% rise in gold.
Okay. Okay.
Anyone else has any questions?
If anyone else has any questions, please go ahead. Parash bhai, Mukti ma'am, Nimit. If anyone has any question on technical analysis or wants to ask anything, please go ahead. I guess.
I think Satya
Go
is
ahead.
right. Any specific suggestion? What is the type of investment all of us should making? I think we talked about gold. I think all relations there. So any specific where the portfolio that you should be making?
If you're on the asset allocation basis, most of
Yeah,
your
I'm referring.
capital should be, yeah,
Please carry on. Please carry on.
yeah. On the asset allocation basis, yeah, most of your capital should be in equities. So because that is the only thing that will give you sustainable returns in long term. But the only problem with equities is you have to identify the companies that will hold 10 years in the market first of all. So there will be very few companies that will be present after 20 years, uh, because if you see that every decade the market leaders will change and technology will bring significant changes to each and every business model. So your 50% to 70% allocation according to your risk profile should be in equities. But you will have to identify the stocks that can hold their business. They can compete in the market for more than 10 years. Rest, I around 10 to 15% should be in gold, and rest in fixed income. Fixed income should be managed like your 10 to 20% in fixed income should be in corporate bonds, AAA corporate bonds, because they will give you much better return than government bonds. FDs I don't advise, because there are government bonds that give you 9%. If you see government backed bonds, uh, there will be NTPC bonds, there will be power grid bonds. Those are all backed by government, and still you get 8 to 9% return. So that doesn't make any sense to keep money in bank FDs that give you 7.2 or 7.25%. That's how I'll make a portfolio.
Okay, thanks so much.
Sir, I have a question. आई थिंक सबके मन में वो चलता होगा मार्केट जैसे भी जाए, पर दास्तान स्टॉक क्या आपको बयां करे, क्योंकि हर बार ऐसा पता भी रहता है कि चलो ये सेक्टर ग्रो कर रहा है, इसमें डालना चाहिए, पर वही मिस हो जाता है। हर बार ऐसा लगता है कि हम जो स्टॉक परचेस करते हैं वही नहीं चलता है, एफएमसीजी सेक्टर हो या कोई भी हो, वो स्टॉक छोड़ के सब चलता है। सर, इज देयर एनी ट्रिक वी कैन अंडरस्टैंड दैट चार्ट और समथिंग लाइक दैट, क्योंकि पता नहीं, पर मेरे साथ तो हर बार होता है कि पूरे जिसमें भी जो चल रहा है उसमें मेरे जो स्टॉक होता है उसको छोड़ के सब अपनी रैली खत्म करके आ जाते हैं और मैं वही की वही खड़ी रहती हूँ। तो ये दास्तान स्टॉक है, शायद सभी को किसी ना किसी स्टेज पे तो महसूस हुआ ही होगा। तो सर उसमें कैसे हम सिलेक्ट कर सकते हैं?
First of all, stop reading newspapers and stop watching CNBC. So the first reason is the stocks that you read in newspaper today have started their rally 6 months back. So why they are highlighted right now is the reason they have given good returns in the past. So, but the first thing about equity markets is past performance is not a good judge of your future returns. So the first thing is don't watch CNBC and don't select stocks on basis of CNBC or on newspapers, because the beaten down stocks that will go higher in the next 6 to 9 month cycle are never mentioned because they don't get any highlight. सब जिसने छक्के चौके मारे उसके ही नाम आएंगे, अब जो फर्स्ट बॉल पे आउट हो गया उसको तो कोई याद नहीं करने वाला. So that is the reason that when you are picking up the stock, you are picking up a stock that is being promoted by a brokerage company or by a fund or by newspapers. So media is showing you what has happened. They are not showing you what will happen. Because if you see a stock that has given you 30% return in last 6 to 9 months, there is a 90% probability it won't give you any returns in next 6 to 9 months. Because if stocks kept on giving 30% returns in 6 to 9 months, then stock will be a multi-bagger. In 10 years, your money will be 100 times. That is not how an economy works. That is not how a business works. So every business is a cyclical business. AC का business है, ठंडी में नहीं चलेगा, गर्मी में चलेगा. Auto business है, we have specific auspicious days जब सबसे बड़ा business दिखेगा. Now if you buy a stock, a auto company based on Dussehra sales, so that was the exceptional thing you're doing already. That is already discounted in the price. कि वो लोग इतना बेचेंगे. Market has already been in a 5 to 10% range. सब एनालिस्ट अपने लेवल्स बना के बैठे हैं कि भाई मारुति ये महीने में 1.5 से 1,60,000 कार बेचेगी. Now if they sell 1,70,000 cars, तो उतना 10,000 का ही डिफरेंस आएगा स्टॉक प्राइस में. बिकॉज 1,50,000 से 1,60,000 सेल्स करेंगे वो तो ऑलरेडी डिस्काउंटेड है. So people have already thought about it. They have invested long before you are even starting to think. So हर बार ये problem every investor के साथ क्यों होता है? Because you buy the stocks that are advertised. The only stock that goes higher is not advertised. जब एक ही स्टॉक सबके पास होगा तो वो स्टॉक कहीं नहीं जाएगा. Because either it has to come down क्योंकि कोई ना कोई इन्वेस्टर निकलेगा. सबके पास अगर है तो ऊपर कभी नहीं जाएगा. Because who is the new one to buy it? The people who are new to buy will push the prices higher. यानी the stock that is most under owned, जिसको कोई नहीं own कर रहा है, those will be the stocks that will give you return in next 2 years. So आज की डेट में if you buy a highly priced stock, like even if you buy I guess Page Industries, one of the most expensive stocks in India. अब Page Industries ने लास्ट में ऑलरेडी रिटर्न दे दिया है. Now if you buy Page Industries, it will give you 5-10% return. In 6 to 9 months, it can give you 10% return. But वो 10% से 20% नीचे आने के chances बहुत ज़्यादा है. So the problem is that everybody is investing at the fag end of the rally of that sector. इसीलिए मैंने आज जो मेटल्स का एक्सप्लेन किया, मेटल्स इज अ सिक्लिकल इन्वेस्टमेंट. वो इकोनॉमी बॉटम आउट होती है उसके पहले बाय करना पड़ता है. दैट विल बी द बेस्ट प्राइसेस व्हेन यू विल गेट, कि जब सब ग्लूम एंड डूम चल रहा है कि बस कुछ भी नहीं रहेगा, सब खत्म हो जाएगा, दैट इज द टाइम टू बाय सिक्लिकल्स. बिकॉज सिक्लिकल्स विल बी द मोस्ट बीटन डाउन स्टॉक्स. वो ऑलमोस्ट 1 to 1.5 प्राइस टू बुक पे आ गए होंगे. From there 1 to 1.5 book they will go to 3. ये उनकी जर्नी है. If you buy government stocks, you can buy it at half the book value. वहां से 2 की book value जाएंगे. अब वो 2 की book value पे कभी ऊपर नहीं जाएंगे. If that translating from half to 2 price to book value, वो स्टॉक में 30% होता है, 50% होता है या 70% होता है. That will depend on how the revenue is generated by them. So whenever you buy the thing that is lowest. ज्यादा से ज्यादा क्या होगा, 50% जो स्टॉक ऑलरेडी नीचे है वो ज्यादा से ज्यादा वहां से 20% और नीचे जाएगा. If the company is good, if the business model is good, management is good, कंपनी अच्छी होनी चाहिए, मैनेजमेंट अच्छा होना चाहिए, they should have a good track record of 10-15 years कि 15 साल से कंपनी चल रही है. Every time, because more than us, they are worried about their company. हमको तो थोड़े पैसे लेके निकल जाना है, वो लोग जायंट्स चला रहे हैं. So whenever they are in problem, they are always innovating. वो लोग हमेशा इनोवेट कर रहे होते हैं कि how I'll get the company running. सीईओ को परफॉर्मेंस पे पैसे मिलते हैं, इकोनॉमी कैसी है उस पे पैसे नहीं मिलते. So they have to keep on innovating, they have to keep on thinking how to turn the company around. So that is the time to buy good stocks when there is nothing to lose. जब आईटीसी 180 और 200 के बीच में चल रहा था, बहुत मीम्स बने, सब लोग ने बहुत मीम्स बनाए कि कुछ भी हो जाए ये तो ऊपर नहीं जाता. But that is a stock that will go higher when the economy is in problem. When economy came into problem, now it has doubled. So जब इकोनॉमी अच्छी चल रही थी तो ऑब्वियसली डिफेंसिव स्टॉक्स कोई बाय नहीं करेगा, बिकॉज एवरीबडी विल बी इन ग्रोथ स्टॉक्स जो एवरी क्वार्टर टू क्वार्टर 30% ग्रोथ दे सकता है. बट जब सबको पता है कि 30% वाला -30% भी आ सकता है ग्रोथ स्टॉक्स में, देन दे गो टू डिफेंसिव स्टॉक्स. इसीलिए अभी एफएमसीजी ऊपर आ रहा है, इसीलिए अभी आईटीसी ऊपर है, बिकॉज एवरीबडी नोस के 25 साल से 30 साल से कंपनी चल रही है, कुछ नहीं तो मेरा स्टॉक प्राइस तो वैल्यू मैनेज करके रखेंगे ये लोग. सो दैट इज द लेवल ऑफ ट्रस्ट दे हैव. हिंदुस्तान यूनिलीवर पूरे वर्ल्ड में एफएमसीजी सेक्टर को ये वैल्यूएशन कोई नहीं देता जो इंडिया में मिलता है. वी गिव 60-70 PE टू एफएमसीजी कंपनीज. पूरे वर्ल्ड में 20 to 25 PE is max, but we have a 140 crore force जो खाएगा, टूथपेस्ट खरीदेगा, ब्रश खरीदेगा. So that is the reason our FMCG stocks are the best when economy is in trouble. वरना कौन याद करेगा, उनका तो ग्रोथ वैसे भी पता ही है, 10 साल एवरी ईयर बढ़ना ही बढ़ना है. लास्ट ईयर 2 लाख करोड़ का बिजनेस किया था, ये ईयर 2,20,000 करोड़ का कर लेंगे. उनकी रन रेट यही है, उनकी रन रेट कभी बढ़ने नहीं वाली. बट दे आर ट्रस्टेड स्टॉक्स. So when economy is in trouble, trusted stocks will go higher. जब everybody is optimistic, तो obviously सब IT stocks, फिर Zomato भी ऊपर जाएगा, क्योंकि that is the time where risk appetite and investors is the highest. और वही टाइम पे ये सब स्टॉक्स ऊपर जाएंगे. As soon as the risk appetite goes lower, सब पुराने ओल्ड इकोनॉमी स्टॉक्स चालू कर देंगे बढ़ना. So the best advice is don't take any decisions based on media. जो आप देखते हो उसके ऊपर कभी डिसीजन मत लो. Find out what is not performing. 52-week लो किस स्टॉक ने किया है, that is more important than what stock has made a 52-week high. क्योंकि 52-week high पे लेके भी क्या कर लेंगे, लेने का टाइम तो वो तब था जब वो 52-week लो कर रहा था.
मुक्ति मैम, आई होप अडानी का क्वेश्चन ने पूछना.
या
I have hi,
अडानी के साथ अडानी खड़ा है तब तक तो ट्रस्ट है. अभी सर ने बोला ना कंपनी कैसे खड़ी है उस पर डिपेंड करता है कितने साल से वो अपना.
Yes, please go ahead if anyone has any question, please.
yeah, I have a question. My name is Samir, and I have a question. I'll put it in two parts. One is, if someone, let's say, has a surplus, so is it better to go? I'm talking about at the point of entry. Is it better to go with SIP or it's better to go with equity? And that is the first part. And second is, because you are saying that equity is definitely better than debt in terms of gains and all, but whether to go for equity or SIP, that is number one. And number two is whether to go at all for mutual funds or one should try straight away in secondary markets.
that will depend on what is your investment corpus. So SIPs are really good for ones who want to invest 5-10,000 every month. Because what happens that even if you are investing 50,000 every month, you can't create a basket. Okay, basket करने में you will have a problem because most of the stocks, say you can only buy one Maruti because that is 8,000. So what happens in making a portfolio can only be created if your corpus is a little bit higher. Like if you have 10, 15 lakhs, 20 lakhs, then you can at least make a corpus with proper allocation to each and every sector. So if your income is recurring, you are a professional and you are going to generate income every month. So SIP is the best you can do because mutual funds will club that money and they will own all the stocks that you can't own. So they will have a MRF also that is 86,000. So we can't own a MRF 86,000 because if you have 50,000 to invest, so 86 वाला तो कभी भी नहीं ले पाएंगे. So that is the first part. So it depends on your corpus.
But actually, what happens is when you go for SIPs and especially what you're saying about the MF, but then you are dependent on the I would say the agency you are using or the person you are who is helping you to put the SIPs, right?
Yeah.
And then over a period of time, as you're correctly saying, the decision totally lies on them rather than you, and then you have to wait for this. So that becomes a bit tricky, because sometimes there was a boom for banking sectors going on. So they were diverting definitely, and I'm sure they also have certain interest when they push you to invest in particular bonds, because I'm sure the kind of commissions they get is more. And don't take me otherwise, but then how do we look into that? Because then we get carried away. End of the day, it's our money which gets impacted.
Yeah, basically everything that is marketed in the market that is not your benefit or company का benefit होगा तभी marketing होगा उसका. So that's about mutual funds. They will be always be marketed because they benefit the fund managers more than they benefit to you. But people who have small corpus, that is the best way out because you won't be able to diversify. A concentrated portfolio only works for certain people who are ready to take full risk in market. Like there are people who will only hold 5 stocks in 100 crore portfolio, but they have a particular view. They enter with a 10-year view कि भाई ये कुछ company कुछ नया करके दिखाएगी. For common people, having a basket of 20-25 stocks in your portfolio is a standard thing. You should have around 20 to 25 stocks. In the 25 stocks, your major chunk will be from top 10 stocks. आपका weight वहाँ से आएगा. And those top 10 will be Nifty top 10 stocks. Because that will only give stability to your portfolio. अब जो बचे वो 15 में decision लेना है. What you want to own and what you don't want to own. क्योंकि पहले 10 तो HDFC बैंक, HDFC Limited, Reliance, Infosys, TCS इसमें चला जाएगा. So the rest 15 stocks, what risk you want to take? You want to go in micro cap, small cap, mid cap. The highest return that you can generate will be from micro caps. जो कंपनी आज 2000 करोड़ से 5000 करोड़ के बीच में है. But they have a very innovative product in market और जिसका target market बहुत बड़ा है. So those are the companies, but in that you are at risk. So आप पोर्टफोलियो में 5 से ज्यादा वैसी कंपनी इन्वेस्ट नहीं कर सकते. So the 5 stocks will be your risky part. The rest 10 are the next market leaders जो है. So वो next 10 market leaders हो जाएंगे. Kajaria for ceramics, Astral for pipes. वैसे करके वो आपके 10 जो होने चाहिए, that should be the market leaders. Who are at a scale of around 30 to 50,000 crores, 60,000 crores. Those have a capacity of reaching 1 lakh, 2 lakh, 5 lakh crores. जो आज के बड़े giants है वहां तक पहुंच सकते हैं. वैसे जैसे Voltas and Havels and Polycab, these people have shown that they can be multi-baggers. तो जो next जो आपके 10 वो portfolio में होने चाहिए वो stable companies who have a track record of past 10 years,
Hmm.
but still are at a stage where they have proved themselves, but they haven't shot up. So ये 10 कंपनी आपकी ये होगी, and the 10 will be if this way your portfolio will be well balanced. So क्योंकि any portfolio, if you measure against Nifty 500, so your beta will always be higher. NSE 500 will move 1%, your portfolio will move 2% on the upside also and on the downside also. So ये हमेशा पोर्टफोलियो लेवल पे बीटा मोस्टली 1.5 to 2.5 होगा. जितना रिस्क आप ऐड करोगे उतना बीटा बढ़ता जाएगा. So if stock market, if the whole index comes 10% lower, you should expect your portfolio be to lower by 15 to 20%. This is a normal course of action. So इसमें कोई नहीं बच सकता unless you hedge your portfolio. जैसे हम options कर लेते हैं, we do covered calls, we take protection, we give protection money. ये सब करके आप अपना downside protect कर सकते हो. But your portfolio beta will be 15 to 20% against 10% index. So अब इसके अंदर आपको कितना रिस्क ऐड करना है, that will depend in the middle 10 stocks. जो stocks mid cap है आज की डेट में, and that can go and become a large cap. बाकी जो micro cap है, तो 5 micro caps that you have taken, उसमें से 3 कंपनी बंद हो जाएगी. 2 that remains will be 10, 20, 30 bagger. So वो जो 3 खत्म हो जाती है उसका टेंशन करने की जरूरत ही नहीं है. There will be 3 companies micro cap that will go zero. But 2 from them or 1 from them, even 1 from them becomes even small cap from micro cap. तो भी वो 10 times बढ़ गया होगा.
So, but yeah, I got your point very clearly. Now, tell me one more thing from the taxation point of view. Because you are gaining profits on this, whether you go by mutual funds or you go by SIPs or this thing. So, which is less taxable, or all are same in the same bucket?
All are same, yeah. There is no difference much. You get 1 lakh long-term capital gain benefit in mutual funds also. Individually also you get 1 lakh long-term capital gain tax benefit. And anyways, equities are the lowest taxed product in India right now. So 15% is short-term and 10% is long-term. So the value doesn't matter whatever you earn in that 10%, because it's a different bracket. It's a different heading in the Income Tax Act. That's capital gains. So it will be treated as 10 and 15%. It doesn't matter what money you earn from that. So taxation won't be different. The only thing is, in a mutual fund, you will have zero say what to buy, what to sell.
True.
There will be times mutual funds will be acting on their benefit. They'll charge you what they are charging. You will never come to know, because जो taxes है, trading cost, taxes, admin fees, ये सब every month NAV में से कट हो जाती है. So expense ratio doesn't tell you कि जो आपका रिटर्न बन रहा है उसके अंदर कितना खर्चा हो रहा है. Expense ratio is what the management is taking from you. That is what management earns from you. So you earn or you don't earn, management will charge you specific fees. So that will be between 1% to 2.5%. जितने risky जातना और जितने active funds ज़्यादा होंगे, they charge you more. Passive funds will charge you less.
Now, this is 1-2% is what, annually or exit or entry loads? What are you referring to?
No, that is annually. That is annually. Yeah.
And then entry and exit loads are different.
Ratio is annually. Yeah, entry exit load. Mostly entry and exit loads are done away with in your markets. SEBI is very strict on them. Entry and exit loads are mainly in most of the high risky investments. जहाँ पे arbitrage funds है, those who are doing very aggressive bets, so they need a protection of 3 years. So they will bind you, because उन्होंने जो investment किया है they know they'll only earn after 3 years. So
Okay.
they don't want to give you money back before 3 years. So that's the reason they will have a lock-in period, or they will have an exit loan. So they'll discourage you going from them. So Baki exit and entry loads are in very few funds now.
Great. Thanks. That was my part. Thank you so much.
Yeah.
I guess Priyanka, although it's open, but no one is asking space. Palash bhai, if you are here, you can. Palash bhai, you can join in, please, if you are here. Please.
Okay.
Yeah. Palash bhai, you may please deliver your message.
So thank you all of you for attending today's